But I also mentioned that I have not found a setup for entry, right? So because I am actually looking for a trading opportunity that will follow my directional bias, I had to wait. So what is this waiting that we talk about? What are we waiting for? You're going to wait for the market to engineer your trades, to create the scenario, right? People call it engineering liquidity, building up liquidity, whatever you want to call it, right? If you're a day trader and you have an expected market direction, you want to see the market create that scenario for you. Now, most times you come and it's already there. Other times you come and you have to exercise a level of patience for the setup to create itself. And most often than not, for day trading, for scalping, it will. The setup that is forming is will tell you the market will go in your direction. What makes you have a confidence or more confidence in your trade direction is when you use directional bias from the higher time frame, as we've discussed. So, with that being established, we will now move into the lower time frame, right? And then we will look for the chart pattern, and then that's when we'll now look for an opportunity to enter the trade. So, fast forward into the future, we have a scenario that prints itself out. And this is our chart pattern, and our checklist is formed in line with the intended direction from the New York session in the morning that we spoke about. So where does time and price come in? Now, when you have a directional bias and you're expecting a setup, listen to me carefully, please, because many people don't mention this when they teach time and price. So when you have a directional bias and you're expecting a setup to form, the setup, when it forms within these particular windows, makes it a high probability trade, make it a more stronger trade. So now this does not mean that after time you don't see a setup. You definitely can. There are many times where you see a setup and you will see different setups as time progresses, as time shows up. But if you are looking for something that works, something that repeats, something that you can build confidence on, you want to include time into it because the market moves at specific sessions, right? So people come to the chart, and when the time is right, they want to see the setup appear on the chart. And if they don't see this, they will go to a lower time frame and start to beat the market, force it to show chart pattern, and then draw chart patterns even when it's not there. The thing about these candlesticks is that by the time you beat it enough and you squeeze it enough, it will give you what you want. Your brain gives you what you're looking for, even when it's not there. And when you see go to the 1 minute time frame and you're looking for this, a trend line has broken, let's look to sell with bias that is bullish, and they wonder why they are losing money. And you come to the 1 minute to start your analysis. It doesn't work that way. We start analysis from the higher time frame, right? Like I taught before, the 1 minute time frame is where we look for the setup. In fact, we use the 15 minutes and the 1 minute, and when we see the setup, we stop at the time frame where we see the setup. We don't even come to the 1 minute, except it's not clear in the higher time frames, right? Now, if you trade Forex, let's talk about time now. Now, if you trade currency pairs, you trade Forex, I'm talking about Euro USD, GBPSD, you get the point. It's the London session and the New York session. And if you're living in a different time zone, the Asian session too, it's also a time where you pay attention to. But there are also specific times, and people call it kill zones, right? And it's taught as kill zones. But there are specific times I personally have noticed that you see the market move, especially trading this model. Now, I'm going to talk in terms of the New York time or the instant standard time, and whether there's daylight savings or no daylight savings. Use this for the New York time and then convert it to your local time. Now, for the London session, we're talking from 2 a.m. in the morning to 5 a.m. in the morning. Now, when you come to the chart and you see your setup at this time, execute your trade. It makes your trades high probability. Now, if you come and you don't see your setup, you wait for it. for the market to create the scenario. Now, if the market does not create this scenario during this time period, then you don't have a trade. The successful trader knows that good things come to those who wait. And if you don't see your trades, you don't have a trade that day. This is what successful trading is. So the 2 a.m. to the 5 a.m., that's what you have for the London time. Now, if your trade now forms outside this, right? If your trade forms outside this, can I still take the trade? Now, you want to not be outside of session too much because there's what we call time distortion. It's a period where the market is quiet. There is no volume coming into the market at that time, right? There is the algorithm, as some of us believe, is not moving price as of that time, or there are no DEX traders sitting at that specific time to move the market, right, or to place orders. Either way, the market is still works with time. Personally, I've seen that, right? And if you're outside the time, sometimes it moves, sometimes it does work, and you have to pick a particular approach. And I believe the market moves based on time, based on sessions. And the New York session, the London session, sorry, starts by 2 a.m. to 5 a.m. Now, when that is over, we move to the next part, which starts by 7 a.m. The London session very early in the morning starts at this time. You can also, some people call it the London New York overlap, right? So it starts by 7 a.m. New York time and all the way to 11 a.m. New York time, right? Now, convert this to your local time. You could use a calculator, you could use your app. Your phone normally comes with apps and different time zones. Use that when you're starting. And when you get used to it, you know, even practice will make you perfect or permanent or whatever you call it. In this scenario, you have to practice it. All right. So within 2 to 5 New York time, if you're working with GMT plus one, it will be from 7 a.m. your time for GMT plus one. So from 12 p.m. GMT plus one to 4 p.m., 12 p.m. to 4 p.m., we are looking for New York trading opportunities, right? Now, if you trade Forex, this is what you are looking for. Now, if you trade the stock indices, right, actively, so you trade the NASDAQ, right, and the best time to trade it, you want to start by 8:30 a.m. Eastern Standard Time, which means GMT plus one, we're talking about 1:30 p.m. Convert it to your time. It can be confusing, but don't let it confuse you, right? Now, from 8:30 or 9:30 a.m., you want to be on your chart looking for opportunities for NASDAQ, day trading, scalping. If you're a swing trader, you can just check at specific times and you have flexibility, right? Because you are holding trades for longer, you're looking for entries that take time to form. This is specifically for day trading and scalping. For swing trading, it also applies, but you don't have to be like following the time back to back and all that. Time and price is powerful when you combine them together. But you have to be flexible. You have to be flexible, right? So for those like when we talk about the advanced class, or when we talk in the advanced class with our students, we teach flexibility. Give in 30 minutes in, 30 minutes out. You can come to your chart by 6:30 when you're looking for 7 a.m. opportunities. By 6:30 you can be there. You can find opportunities maybe after 10 a.m. or after 9 a.m. Allow yourself those little rooms of 15 to 30 minutes interval, right? But this is it. Then we will talk about the final part of the time, which has to do with the London close, right? The London close, or where the New York is going on a break also. Now, so like this trade you see happened in the London's close, um, and when the market is wrapping up, I saw this opportunity and I looked. This is my setup, waiting for it, and then time is working with me. Time is on my side. So because time is on my side, I have more confidence on this trade. So the only thing you look for in time is your setup. This is why time and price make sense. Time, then the time, the windows at which you're trading, then price. Price means my trading setup, my building block setup, my whatever your trading strategy is. When you see your setup form in time, that means time and price are working in alignment, right? So people think, oh, time is going to show me my strategy. No, time is going to give you the window, and when your system forms in time, makes perfect probability for you to take advantage of it, right? So that's it. So insist on your strategy. Stop doing what is not in your strategy. So, because I saw a setup on Friday and somebody is just drawing trend lines. And I've thought this simply. We are looking for drive one, drive two, drive three, or block one, block two, block three. This is the criteria. Why on earth is somebody just marking trend lines and you're seeing haphazard trend lines and the price is going up, coming down, and then you're just forcing because you want to trade a trend line strategy. I didn't teach a trend line strategy. I never taught a trend line strategy. I taught a strategy that inculcates trend lines. We taught a system that includes trend line in the strategy. So there is like 4 or 5 checklists. So you see, discipline is the major reason we don't see success in trading. If we can be disciplined with the process, we will see success. Disciplined enough to force our strategy. So the London close is around 11 a.m. New York time, 4 or 5 GMT plus 1. So the fact that we teach time and price, listen to this, does not carve things in stone. You want to be flexible even with your time. Giving the 15 minutes in or the 15 minutes out or the 5 minutes in or the 5 minutes out. Work with your rules, but be flexible when it comes to how the market is forming or what time frames you're looking at it. Okay, so I want to wrap this up here. We'll cover the other part of this in the next session. So this will be all for now.